Alright, so we've just hit midnight. As you guys can see, what I'm going to be doing now is requesting 3 payouts across 3 of my separate accounts. 1 with Alpha Capital, 2 with Top Step right now, and I've just hit my minimum trading days today, so let's go ahead and request the payouts across all 3 accounts. Alright guys, so now the question that you are probably all asking yourselves is what were the trades that you actually took in order to get the 3 separate payouts within one singular trading week. And by the way, don't just take it from me, my students have also absolutely crushed it this week. So yeah, you know, this is what's possible using the framework that I use every single day. But yeah, without wasting any more time, let's jump straight into the charts. What we're going to be doing is breaking down each individual day by day, trade by trade, step by step, okay? So buckle up, going to be a great video here. And yeah, obviously every single trade was taken on the indices triad, on NQ itself. So yeah, let's break down the framework. So coming into the week, I was of course bullish because if we take a look at the previous weekly candle closure, you can see it did give the continuation candle closure to the upside, okay? So we traded this week here. This week has now, or about to come to an end in 8 minutes. So it's currently Friday today. So yeah, so what we're always doing is looking back upon the previous candle closure. So how did this week here close? And how can that give us an insight on how to trade this upcoming week, the week that we have just had, right? So looking at this candle closure, as you can see, it closed above the previous weekly candle's high, the wick of it, on not only NQ, but ES and also YM as well, okay? So we've got a continuation candle signature on the weekly time frame across the board on all 3 assets. So that alone could have given you literally the bias for the whole entire week just by looking at the candle closure, right? So this is why they are so valuable and so important. And that's how I came to the conclusion of looking for higher prices myself, right? So that's how I came to the conclusion of, you know, bullish bias for the week. Now, how do we know the low of the week is most likely in, right? There's 2 ways to know that. One way is if it rebalances the previous candle's range. And you're probably wondering, you know, what does that mean? So what you want to do is mark out this candle here, okay? So you've got 3 candles. This candle in the middle, we don't care about. The candle to the left, you want to go ahead and mark out the wick, draw a straight line out, and then we're looking for this candle here to trade back into the wick, right? What this does is closes in any potential gap that could form within price, right? So just imagine how a gap forms. As you can see here, we've got candle 1, 2, and 3. Mark out candle 1's wick. And as you can see, this candle here did not rebalance its range, so it left behind a fair value gap, okay? In this case, price could have left behind a gap, or if it's not going to leave behind a gap, it's going to rebalance the range. So that's exactly what it did. You can see it trades lower initially, closes in any potential gap forming, which now means this range here is balanced. There's no fair value gap there. There's no fair value. There's no gap left behind. It's perfectly balanced, okay? So once price hits that level, this is then when we're looking for the cracks and correlations, the quarterly theory sort of concepts to confirm that we are now ready to trade higher from here, right? So if we drop down now to the daily chart, right, we can go ahead and see if the daily framework aligns with the weekly candle, right? So the rebalance was here, right? This was the previous week's high, okay? So that was the wick high of that candle. Not the previous week, sorry. This candle number 1's wick here, slightly higher. So mark that out, and as you can see, it is there. I don't know why it glitches out a little bit like that, but whatever. So with perfectly resting within the rebalance of this range here is a bullish daily gap, okay? Bullish daily gap, mark that out in time. See if we get any crack and correlation inside of it. So let's take a look. You know, what we can do is mark out that gap on all assets, and we can look for a potential SMT fill. So NQ traders below 50. Did ES trade below 50? I think it might have done. I don't think we actually had an SMT fill here. Yeah, so ES traded below 50. YM also traded below 50. No SMT fill, okay? So looking at that alone, yes, that can be low of the week, just drop it into a gap. Ideally, we want to see a cracking correlation putting in our low of the week though. So no SMT fill on the daily time frame. We also didn't get a daily PSP. So what's the next best thing? Would be a weekly cycle sequential SMT, right? So now let's drop to the hourly time frame. And because nothing formed on Monday, no bullish weekly cycle sequential SMT formed, that means we're coming to Tuesday, the following day, with inside of our minds knowing that Monday didn't manipulate, so we could be expecting it within Tuesday, right? As you guys can see, we did indeed get a bullish weekly cycle sequential SMT here between Monday and Tuesday, right? So if we take a look at YM, we mark out Monday's lowest low. As you can see, YM did indeed push below it, right? So now, how do we then confirm this weekly cycle sequential SMT is likely to hold? literally from a tCISD. So which candle ran below Monday's low first? The very first candle that ran below was that 7 p.m. candle, okay? So if we go to NQ, we use that 7 p.m. candle as our tCISD, our confirmation that the manipulation is in for the week, and we're probably going to trade higher. But the 7 p.m. candle within NQ is bullish, right? So as you guys know, a bullish tCISD, a bullish sequential SMT, the tCISD for that has to be a bearish candle, right? So in a bullish scenario, the tCISD candle has to be bearish. So in this case, the 7 p.m. can't be the tCISD. So what do? Super simple, look to our left, and we mark out the open of the very most recent bearish candle, right? So that's the open marked out right there, as you can see. Price then closes above it at 8 p.m, right? And from there, you could have taken this long here. But if you look a little bit deeper, you can see that the 10 p.m. candle did actually close back down below the tCISD right here. So that is actually invalidating the bullish tCISD, right? So from there, you'd be thinking, okay, are we actually bullish now, or are we potentially bearish at the moment, right? So at the moment, you wouldn't really be doing much. This is obviously within Asia session anyway, so probably wouldn't even be on the charts. So now all we're doing here is waiting for price to either cancel out the bullish weekly that we've got to potentially invalidate our bullish bias for the week, or we're looking for price to just close back above that tCISD to reconfirm it again, essentially, right? And this can happen. You can get closed back above, and then the tCISD can then become valid again, only if the weekly cycle sequential SMT remains intact. In this case, we'd put in a low tCISD, cancel it out, put in another new low, confirm the tCISD again, the weekly cycle was still there, perfect, right? From that alone, we're like, okay, cool. Now we've got to be bullish, right? Because we confirm it once, disrespect it, then reconfirm it again for the second time. So that is pretty bullish, okay? So then all we're doing from there is literally just looking for any reason to go long now, right? You can trade the longs on Tuesday itself after the manipulation has been confirmed. And then you can also come into Wednesday the following day and anticipate distribution from Tuesday's manipulation, right? As you can see, Wednesday was kind of mid, but Tuesday did actually give some nice longs after the tCISD. So looking at Monday, you would have, sort of been waiting for the manipulation lower for that open low for the weekly candle. Let's just see if there is a 90-minute tCISD model on Monday. I can't quite remember if there was or not, but let's take a look. So we go to the 5-minute time frame and we'll take a look at Monday here. Obviously, that 9 to 10:30 window. Yeah, okay, there was a model. I can't remember if this was the trade that I took, but as you can see, Q2, Q3 right there, right? NQ did wick below it at 9:40. But the tCISD isn't this candle here because YM had actually run below Q2's lows first, right? The very first asset to run below. So that then is our tCISD candle. So 9:20, going to go ahead and mark out the open of this, right? As you can see, same scenario again. We closed above it, then we closed back down below it, put in a new low. Not only that as well, but we put in a new sequential SMT between ES and NQ. So that's a lot higher probability than just one forming with YM. And then we close back above the tCISD. You can use the original one with YM, or if a newly formed sequential SMT forms between ES and NQ, you can then use that tCISD candle between NQ and ES, for example. So you could use this one here, right? We closed above it right there at 9:45. So any time after that, you could have just taken it long, right? I personally didn't take a trade on this day, though. I thought it was pretty sloppy, but, the framework was there. I was pretty confident that low of the week was most likely in as well, just because we had rebalanced that previous week's range at this point. Then we'd formed a clear cracking correlation, confirmed it, and then, as you can see, that remained low of the week. But that wasn't our manipulation. The manipulation took place on Tuesday, but it was a value swing on NQ and ES, so technically Monday low of the week, but Tuesday technically was that manipulation day, okay? So that's Monday, wrapped up right there. Now let's jump into Tuesday's price action, see if we got a 90-minute tCISD model here. So you can see we set one up for the bearish scenario, but again, why are we going to take the bearish one when we know that we're bullish, right? We've rebalanced the previous week's range. We'd put in a bullish weekly cycle sequential SMT at this point. There's just no reason to, sort of be looking for, shorts, right? So there was a short setup there. This one played out here within Q1, Q2, kind of messy here. Then Q3, YM gave us a bullish 90-minute cycle sequential SMT at 9:40, okay? And you can see that 9:40 candle, though, for NQ was all the way up there. And our most recent bearish one was here. So we'd already initially just confirmed it anyway, all the way up here. The trade that you could have taken would have been sort of just entering off this gap here, right? And just letting it run up higher, as you can see, sort of like this. First, gap after the tCISD. But Again, for me, price was just way too overextended. I just didn't want to take this trade here, but the framework was there. And we did indeed, sort of push higher. But like I said as well, Tuesday was a little bit weird. We ran higher, then we ran lower, then we ran back higher again. So yeah, wasn't necessarily the cleanest, but yeah, that's what you could have taken there on Tuesday. And now let's go to Wednesday. So Tuesday was our quote unquote manipulation day. So now if we go over to Wednesday and see what we got here within Wednesday. I remember this. This actually happened Wednesday, Thursday, and Friday, where pre-open market just either dumped or like ripped higher, and then after that, the open of the market just traded back into the gap that formed before the huge dump or pump, essentially. So it was a weird one. But if you go to the hourly, you can see that the huge drop lower that we did have, I was still calling for longs the whole entire time, because all it did was push price into a discount of Tuesday's range, right? So Tuesday's range right there, as you can see, straight into a discount. And not only that, but we'd formed like a little SMT there. It wasn't sequential, so it didn't, I wasn't caring too much about it, but it's just any confluences in line with that bullish bias that I got based upon Tuesday's manipulation. So Tuesday manipulated, Q3, Wednesday expecting distribution to the upside, right? So this drop to me was just all manipulation. And as you can see, it formed a weekly cycle. Not a weekly cycle, sorry. It formed like a little miniature SMT there on the hourly. And then what you can do from here is just look for a lower time frame sequential SMT and a tCISD model, right? So we go ahead and take a look. So this was the drop here that happened on Wednesday. No daily cycle. So then we work our way down. Was there any 90-minute cycle? Let's go ahead and take a look. No 90-minute cycle. So what's the final sort of last call of action would just be a microcycle, right? So let's go ahead and take a look. If we had a microcycle there, where's it at? Is it here? Yep, this is it here. As you guys can see, we did get that microcycle. Was a little bit later on though. It wasn't, as soon as the drop happened, but it was there between Q2 and Q3 with YM. So yeah, YM being the failure swing, NQ and ES being that turtle soup. So as you can see, NQ ran out the lows with this candle here at 9.53. Price then closed above tCISD right there. And then this was actually a trade that I took here. As you can see, the 10 o'clock opened up low. We had news at 10 as well. And also, just super bullish. I wanted to target sort of like that, these highs up here. So the drawn liquidity for me was higher. So price opened up low with that 10 o'clock. I waited for it to then close bullish. As you can see there, the 10 o'clock candle. Not bullish, sorry, just like reject higher slightly. Then I placed my stop on these lows here. And literally just target this high for like roughly around about 2R. Again, like I don't need much from the markets. I just need like 2 to 3R and I'm fine. Just target that low hanging fruit. And yeah, as you can see, it played out very nicely. We got that bullish micro. We had the tCISD, 10 o'clock news, opened up lower initially, then began rejecting higher. So, to me, there's just no reason why it won't trade towards its high. Q3 distribution day, daily candle closures lined up perfectly with everything. And yeah, as you can see, the trade played out very nicely. And then from there as well, this was just sort of like the low, like this was manipulation like I called it to be. And ever since then, we just ran higher and higher and higher, okay? So that was the trade there on Wednesday. Like I said, it's been a bit of a strange week, but I mean, hey, it is what it is. So now the trade on Thursday, which was another one that I took as well. Keep in mind as well, the next video that I'm going to be posting on my YouTube is actually going over the tCISD, because I've been doing a lot of research, a lot of back testing, forward testing about the tCISD itself. Obviously, the concept founded by me, and there is something very special in which you can do with it. And I'll be showing you guys that trade in just a moment now, the one that I took on Thursday using the tCISD. Okay, so stay tuned for that. We'll break it down in just a moment, but also we'll go super in detail and make a video specifically on that sometime next week. Okay, so it's called the inversion tCISD. The clue is in the name. You use the tCISD as an inversion. It's more of like an advanced entry technique, but it is insanely powerful. And when used correctly, it can even be better than the regular tCISD on its own, okay? So super powerful. I'll show you guys how I use it now for Thursday's trade, but keep in mind, I will be doing a full video on that. And also, I forgot to mention, I'm also be doing a free live masterclass showing you guys how you can absolutely completely break down your trading and simplify it to like the most simplest form that you ever get. Make trading super easy, so you come to the charts every single day with a structured plan, everything simple, you're going to have that high confidence because, you know, you're not looking for 101 confluences. And I'm going to be breaking that down in a free live masterclass. So if you do want to apply for that, link will be down below in the description. That will be taking place on the Thursday, 17th of December. But yeah, with that being said, hopefully see you guys in there. But yeah, let's break down the trade that we did take on Thursday. So looking at the hourly time frame, right? Let's go ahead and take a look. So obviously Wednesday was our distribution, right? It was more or less like a pretty choppy day. If we look at the candle closure for Wednesday as well, you can see here, it was technically a, you know, a quote unquote reversal signature, but right, if we take a look at ES gave a continuation signature candle closure, right? And also YM gave a continuation candle signature as well, okay? So if 2 out of 3 assets are given a specific candle closure, whether that be a reversal or continuation, trust that over the one asset that's forming, you know, the one difference. So in this case, NQ reversal, ES, YM continuation, okay? So I'm just looking at that and thinking 2 assets are given a continuation. I'm going to trust a continuation. And not only that, but using initiative, this is, you know, barely a wick, right? This is barely a pullback. This doesn't really show us too much. This doesn't really scream to me like, oh, huge reversal, okay? Right, so keep that in mind. And we don't have a cracking correlation between these 2 highs. There's nothing between Tuesday and Wednesday in the bearish scenario, right? So remember, like I said, you want to combine the 2 together. So if 2 out of 3 assets are even continuation candle, and we don't have any cracking correlation bearish to the downside, are we really going to trust that one singular asset that's given a reversal signature? No, we're not, okay? So even still, coming into Thursday, looking for that previous day highest target, and also my main highs for the week as well, like my all-time draw, which, by the way, I called out to my mentorship students within the weekly outlook that we did, literally on the weekend. Before all of these candles formed, I said I want to see this high delivered to this week. And look, you know, look exactly what happened, right? So super clean week, called literally price actions to the T every single day, as we mostly do every single day as well. So yes, the Thursday coming into the day, drawn liquidity being higher, candle closure being higher as well. So all I'm doing is waiting for that 9 to 10:30 window and looking for any reason to get into a you know, a long position or potentially short if price gives me a short. And it was actually a short that I took, but I'll show you guys why. So Thursday, as you can see, we didn't actually know. Thursday we got a bearish hidden sequential SMT between London and New York AM, right? tCISD, you know, all closed below, all that good stuff. The short that I took was around here, around 10 o'clock mark, and I'll show you guys why in a moment. So we got the bearish hidden. We'd also taken the previous day high. So like I said to you guys, coming into the day, I'm looking for the previous day high to be like the main target, but still overall bullish up here, right? So previous day high had been taken, so the main objective had been hit, so we can now pull back. Think in terms of weekly candle, weekly open low, high close. We put in a high, we could have pulled back and reverse, but we did continue on Friday, and I'll tell you guys why soon. So we've taken that previous day high, but not only that, we actually had a cracking correlation on the highs as well. So remember, even though we take the high, we're looking for the cracks to confirm if we're going to reverse lower or continue higher. In this case, Q3, Q4, hidden weekly cycle sequential SMT, confirmed via a tCISD. And also you can see we confirmed it, the tCISD, but then we wick back above it. And again, that doesn't cancel the tCISD. The tCISD is only invalidated if we close above the tCISD body. So we can be all the way up here, you know, just taking liquidity as we do, forming another crack here potentially. And as long as we see price closing back under, rejecting back into the tCISD, then you can still continue to look for trades in line with the tCISD. And overall, you can see we did end up closing below it. So that's all I did. 9 o'clock candle. I took the short around here somewhere. I'll show you guys where in a moment. We've taken some highs. This is where we'd formed the hidden weekly cycle and the hidden daily cycle. So I'm thinking, okay, cool. We've created 2 cracks. We're rejecting heavily. We're back into the tCISD. I'm now going to take a short, right? So then all we can do is if we now go to, there was nothing on the 90. There was a micro. And this is the advanced inversion tCISD, the iTCISD, whatever you want to call it. Entry over here. So let me go ahead and show you guys. So on Thursday around that 10 o'clock mark, down here, okay? So as you can see, there's no bearish tCISD here. I took a short right here. So let me mark it out and you guys can, you know, probably guess why I took it here. By the way, we did get edged literally like 5 ticks away from stopping me out, but perfect stop loss placement right there. TP on these lows. Right, so why did I take this? Okay, bullish tCISD, obviously indicators not marking out any bullish sequential SMT here, but it was there, right? A bullish microcycle sequential SMT, it was literally right here, I believe. Yeah, with ES, okay? So as you can see, ES, that candle there, 946 specifically, ran below Q3 lows, and NQ was above Q3 lows. So that is a bullish microcycle, sequential SMT, right? Then you can see price closed above the tCISD, because that is the candle that creates sequential SMT. Closure above there at 950. So now, people that don't know how to apply narrative and draws on liquidity within the trading, they probably would have just long based on this tCISD setup here, right? But narrative, new 4-hour candles opening very soon, so we're likely to take these lows, right? That's what you need to think. Are we closer to the high or the low of the previous 4-hour candle? Okay, as you can see, closer to the low. This was actually towards the end of the candle, but I was still expecting, you know, a pretty expansive candle to the downside and sort of close where the lows are essentially. So yeah, so tCISD got confirmed. Then we disrespected it at 951, so we closed below the tCISD candle, which is this tiny little body here, essentially, right? Which you can't actually even see. Let me drag this down. Right there, okay? Close above, close back down below, right? Then we did actually close back above it again, but then we closed below it here anyway. But I took my entry around about here, 953, okay? Right there. So, tCISD, we know that they form and they can give us a bias and sort of like tell us when price is ready to turn. So microcycle, sequential SMT, bullish tCISD, cool. Now, if we're bullish, we want to see price respecting the tCISD to trade higher. So then what happens? Same with any other PDA. What happens when the bullish gap gets inversed? You can take it to the downside, right? Same with the tCISD. If the bullish tCISD fails, that likely means price isn't ready to turn around yet, because as we know, that is the best confirmation of a sequential SMT. So if that fails, you need to be thinking in your head, okay, do we have a clear draw below us? Is there a reason to go lower? Is there a reason why this sequential SMT and tCISD failed? If there is, you can then take the inversion. This is why it's more advanced, because it requires a lot more thought process. But everything lined up with inverse the tCISD. If the tCISD was going to hold and you know give bullish prices higher, then essentially it should just hold, right? It shouldn't get closed below. If it gets closed below, that's a sign that price often wants to see liquidity even further before potentially then moving back higher again. So yeah, that was the thought process. We confirmed the tCISD, we completely disrespected it, then we enter off the tCISD candle itself, the bullish one, as like a quote-unquote inversion tCISD. Stop goes on the recent swing high. As you can see, perfect stop loss, and then target the low hanging fruit again, right? And that's all we did. So that is essentially the tCISD, the inversion tCISD, which I will be making a whole entire separate YouTube video on soon, just breaking it down and really showing you guys how powerful it is and how you can incorporate it into the 90-minute tCISD model itself, right? So yeah, that was the trade that we took on Thursday. So just 2 trades on the week to lock in over 4 figures in payouts as well, with 3 separate payouts across 3 different accounts. And not only that as well, we did actually manage to pass 2 more funded challenges as well, so we're just adding more to the arsenal now essentially. But yeah, with that being said, that was Thursday's trade, and I guess sort of like Thursday's price action. So you can see it did, you know, initially trade lower, but then we did get that move higher. So now Friday, the final day of the week, a lot of you guys may be confused by this, you know, why did we trade higher? Why did we not trade lower after the reversal signature closure? Simple, right? Super simple. Obviously, main thing being the drawn liquidity was just higher. Like, the drawn liquidity was this high up here, right? Are we really going to turn around and leave this high here? Probably not. Like, this is the most important thing within trading, draws on liquidity. If you don't understand those, then, you know, you're just going to be taking setups just like super mechanically and just more or less just like a pattern, essentially. You don't want to be trading the charts like a pattern. You want to be reading it like a book and trading in line with it, right? So the draw was up here. But we could have easily pulled back down, you know, for the week, rest of the week, and then traded back higher next week, for example. But all we do, guys, is literally just look into Friday and see if it makes sense to go lower or higher. Like, have we got invalidations to continue higher, or have we got invalidations to reverse lower? You know, validation and invalidation utilizing the tCISD is super important. So let's look at the cycles. As you can see, yesterday's tCISD that gave the move lower, right? Coming into the new day, Friday. Not the very first, but the second candle of the day literally traded into the tCISD. But remember, it's still valid until we close above it, right? So literally closure above there right at 9 p.m. And then also later on within the day, as you can see, we traded above this previous day high, okay? So then we more or less got a new cracking correlation in place, a weekly cycle, sequential SMT, okay? So you can go ahead and mark out the high right there and see where our tCISD would be. In this case, it wouldn't be here because ES had taken out the previous day high a lot faster. as you can see, off literally that 9 p.m. candle right there. So that's our tCISD on both ES, NQ, and YM, right? Now, we did actually close below it right there at 8 a.m., right? So now, yes, you can look for shorts inside of the tCISD, but if you look on the lows, what do we form down here? A hidden bullish weekly cycle sequential SMT, right? Because as you can see, YM closed below Thursday's lowest closure, NQ didn't, ES didn't, right? Remember where the drawn liquidity was? Still higher, right? So why are we looking for shorts if we're getting bullish cracks and we're getting super large displacement to the upside, okay? Okay, you still could have been looking for shorts inside of the 1 hour tCISD. Does this candle look like it offered a single short opportunity inside of this 1 hour tCISD? Absolutely not. Super expansive candle straight to the upside. I can tell you now for a fact, more or less every single 5-minute candle within this hourly candle was bullish. So that means we don't have a single bearish tCISD set up to the downside inside of this 1 hour tCISD, okay? And remember, you mark out the tCISD close, and if we close above it, then that's that tCISD invalidated, and that means often we're just going to continue higher and higher and higher, okay? So literally within this candle, closure above, boom. After this, looking for longs up to that daily high. Then once we hit the daily high, then of course we can retrace. So like I was saying, if we drop to the 5-minute and look at that hourly candle, so it was from 9 a.m. 1, 2, 3, 4, 5, 6, let's be careful, 7, 9. So 9, no, sorry, 8 candles, or was it 7? I don't know. As you can see, like more or less, most of the candles were bullish, right? And also we got a nice retracement with a huge rejection here as well, sort of like midway through the candle, okay? So there really wasn't anything bearish here. And also there were no bearish cracks to enter from anyway, right? There's no bearish 90, there's no, daily cycle bearish, anything like that. No reason to be bearish, essentially, okay? Now, the reason why you could have taken a long is obviously, if you look at the hourly, right? You can see, you could have waited for this tCISD to get confirmed and then sort of like long from here, but this was pretty choppy. I was looking for longs within the 9 a.m. candle itself, but there wasn't, like I said, no daily cycle, no 90-minute cycle, no microcycle bullish, but what they were was the inversion tCISD entries, okay? Like I said, the more advanced ones, I did call these out as entries, but because I'd already hit and, the payouts on the week and performed pretty well on the week, I was just like, okay, it's Friday, price looks pretty clear, but the entries itself aren't the cleanest because, we didn't get a single bullish tCISD to the upside, essentially. We only had the inversion ones, but as you can see, we'd expect price to trade higher. So any bearish tCISD that forms, as soon as it gets closed above, right, entry long, right? Over here, closure above, entry long off this gap, boom. Simple as that, okay? So that's how you could have entered from the inversion tCISDs. But yeah, you can see just ripped higher, 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 and then boom, we hit those daily highs. Then from there, we more or less just retrace lower for the rest of the day, basically, as you can see over here, okay? So remember, open, high, low, close. More or less, if Friday, like the first half of the day is expanded to the upside, you can then expect that AM and towards the AM and PM to sort of pull back and, leave at least somewhat of a wick on the high of the weekly candle. And that's exactly what happened, right? So yeah, that is essentially the whole entire weekly breakdown. While I'm here, let me just tell you guys what I'm expecting for next week. If we look at the candle closure, close above this week high here. So what's this? A continuation candle signature to the upside. What's sort of like the not guarantee, but pretty obvious target coming into the new week, previous week high. If we don't get a cracking correlation above these previous week highs, what do we expect? Continuation. If we do get a cracking correlation on the previous week high, once we're above it, which would, most likely not be a monthly cycle, if all assets trade above it, be looking for a weekly cycle, then we could pull back and drop a little bit lower, okay? So yeah, more or less higher. And then again, think in terms of monthly candle, higher for the first, half of the candle, then pull back to put in that wick, and also the 12-month candle. We are now in December, so we'll probably, pump up a little bit, and then towards the end of December, begin that pull back down into the range slightly. So yeah, that's a little quick overview for what I'm expecting as well coming into the new week. But yeah, hopefully you guys did find this video useful. Again, pretty much the last 3 videos, I've done them in order. So video number 1, I broke down my model, which is how I got 500k total funding. Video 2 was how I then went ahead and passed another 150k in funding using the exact same simple process model, the 90-minute tCISD model. And then this video today was showing you guys how I then utilized the 350k accounts that I passed, 150k in funding, to then get a payout across all 3 of those accounts, totaling to over 4-figure payout requested just in under a week. Okay, so Again, you know, I'm not here to brag or show numbers or anything, but I'm just here to show you guys what is possible with the 90-minute tCISD model and the correct psychology. But this is why having a system within trading is so important. And if you guys do feel like you struggle with that, I would definitely recommend to apply for the mentorship. It will be down below in the description, because I'm essentially there by your side every single day, you know, checking up on you, checking out the trades that you're taking, giving you my exact roadmap to follow day by day, and just helping keep you accountable and allowing you to book in one-to-ones whenever you would like to break down trades or anything of that nature. And, you know, I'll work with you until you get funded and paid out, or we continue working together forever, okay? But yeah, with that being said, hopefully you guys did enjoy the style of video. And remember, next video next week will be me going over the inversion tCISD, the tCISD concept. Super powerful, more of an advanced entry technique, but when used correctly, very powerful, okay? So yeah, with that being said, remember, live masterclass coming up soon. Link below in the description to apply for that, completely free for everyone. And we'll be dropping some source inside of there. And yeah, make sure to check out my socials down below in the description, my free Discord, also the prop firms that I use to get the payouts, and also many other prop firms in which you guys can use to get payouts like myself. Link below in the description, code BOOKO at checkout will get you the biggest discount on all of the prop firms, right? So yeah, with that being said, leave a like, subscribe, comment down below if you did enjoy the video, and feel free to ask me any questions. I'll always respond to all comments. And yeah, enjoy the rest of your days, and I look forward to seeing you guys in the next video. Peace out.